Hello, good afternoon, everyone, or good morning, wherever you may be, and welcome to our midday market update for February 6th of 2017. It's Monday, a Monday after a non-farm employment report. We had a positive jobs number. We discussed it with our subscribers on Sunday, and what it meant for rates, what it means for the economy as a whole. And the Mondays, typically, a Monday after non-farm payrolls is a little bit of a drowsy day. You'll expect to trade more range bound than you will continuation and extensions of trends. You just got to know that. You know that through experience, and you know that through joining for the Trade Pro Academy Earn Package free trial, which comes with 14 days access to our live trading room. I show you every single trade and every dollar that I make live there. I have nothing to hide. Okay, I don't like to hide. I'm like an open book. You could read it. You could see the play. You could see my logic behind why I trade. And today off the hop, I told our subscribers in the morning, we're probably going to be range bound. Don't get excited holding for 30-point winners. Take some profit, bid the lows, sell the highs, and that's what I've been doing myself. Up about 462 on S&P, 500, 200 on crude, 165 on the minis on NASDAQ. So it's a decent morning session considering there's a lot of slow chop. We'll discuss that after the YouTube broadcast with our subscribers and what trades you see for the afternoon. Found a great opportunity on oil. In fact, I might need to make a trade in between this broadcast, but I'll let you know if I do. All right, the information in this presentation is for educational purposes and not constitute investment advice. The risk of trading markets can be substantial. You should consider if engaging in such activity suitable to your own financial situation. We're not responsible. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. Okay, the lawyers are happy. Let's jump into the actual analysis. S&P 500 today, it's within the confines of the Friday candle. Right, we found a lot of bullishness because we had a lot of shorts last week that weren't getting paid, so they got squeezed out. All right, the one thing I was telling you guys on oil is I think there's a lot of long traders above 54, and I said all along, let's sell these 54s. Today we sold 53.64 in front of our subscribers. One contract with the requirement of $4,000 of margin, and we're already up 10% on that position, just like that. So not a bad day. Continue for oil. Continue to see some downside prices in oil. I think they're going to pressure some of these lows like a pressure cooker. The broadcast that sent out on the 1 hour, or a reason for getting short around these 64s, was, hey, we've been containing oil price a lot around these 53 halves. If we blow below them, we got a lot of sell stops coming, and that's why you saw a lot of volume as sell stops were triggered and elected. And now I think we hit 53s for the close. So I think we got a little bit more downside. Below 53, however, be cognizant of these lows somewhere around 52.90. I think it'll come in here and reverse sharply and take out some buy stops to get back to where we are now. That's kind of the afternoon trade. We're below some key supports. Oil will continue to slide, and that's also on U.S. dollar strength. Last week we said 99 halves could be good support for the dollar. It bounced, sure enough, based on this low here. I've been talking about this for weeks now. That's where support will be. Below 100, 99 half. If we continue lower, because we can continue lower, then you're looking at 99 evens. That's your next target. And the target below that's 98 ultimately. And then we'll definitely bounce from there. Well, not definite. Nothing's definite in the market. All right, one of the good trades we've taken since last week, we started to buy oil around 12.17. So we got them down here on this dip. Not oil, gold rather, I apologize. We continue to hold this long gold trade. We're bullish on gold. I think we get 1250 to 1260. If you look at seasonality patterns, a whole bunch of data that we presented on Sunday, you'll know why we're so bullish. But we like this trend. I think it'll keep going. If you're not in it, I don't suggest buying it right now. You'd be kind of buying a high, wait for a bit of a dip, maybe try to get the 20s. But at the end of the day, it's up to you. All right, it's up to you how you trade, what you trade, and why you trade it, as the disclaimer states. But that's what I'm looking at. I'm looking to add this at the 20s and try to ride to 60, 50, 60 to 65, 70 tops on this trade before it continues to the downside and rolls over. All right, the dollar's strong, as we talked about. On the currency front, we're looking at a bit of a rebound on the dollar on a one-day chart and a drop in other assets. So what you're looking at, zeros down, GBP's down. GBP's down on a lot of Brexit talk again from Theresa May in the parliament there. I think the market's starting to get spooked out by the fact that the Brexit will happen. A lot of traders still don't realize this. The Brexit was voted. It was a surprise result. The market tanked, and the reason it recovered so quick is because there was talk that we might need some parliamentary approval, or it needs to go before the courts before that decision's actually enacted and triggers something called Article 50, which is the official exit process from the European Union. But, you know, if you don't know that, then that's why the rebound happened. That's why it was so sharp. And now that we're actually starting to factor in that it could happen, equity markets have already shrugged it off down here in 2016, but I think currencies have not yet, and that's putting some weakness on the pound, and it's bidding the dollar up. So what I'm looking for on retracements in currencies, I'm not a fader in currency markets because faders get butchered. All right, I love to catch a falling knife. Here's a knife blade. Terrible knife. It's more like a dagger I'm drawing. I love to catch a knife on the S&Ps. I love to catch a knife on other assets and futures. I will not look for catching knives on currencies often because more often than not, you're going to get your throat slit on trying to catch that knife. And you don't want that. All right, that's kind of the play. So I'm looking to sell all currencies and purchase the US on retracements. That's the trade. I got a few trades up there set up for our Trade Pro subscribers. If you want to sign up for 14-day free trial, you could see them all early. All right, Euros weak. It's a blue line. Of all the pairs, it looks like the pound is the weakest. Therefore, I would look to maybe short one of the stronger ones that haven't started moving yet, like the Australian dollar, the Aussie dollar. Love to short Aussie and buy the US on that front because I think they got a lot more room to move. All right, that's my currency outlook. Long the dollar, short other currencies against it. Because oil is weak, definitely short the CAD and short the Australian dollar to try to play that weakness on the back of also dollar strength. That'll be the best trade out there. All right, what else are we looking for? Oil is weak. Equities are weak. Let's look at some equity indicators here. S&Ps have not hit fresh high. In fact, they're just consolidating within yesterday or Friday's session or in Friday's range. NASDAQ is the closest to breaking through to fresh highs. If we break above, we got buy stops coming. NASDAQ's a really strong index. It's been on fire. And Russell 2000 has not yet hit a new all-time high. In fact, you're getting lower highs, but also you're getting higher lows. Starting to consolidate a little bit. It winds down. Russell could break if these markets continue higher. Look, I'm of the opinion that we're getting a little overdone on this upside, but I'm never of the opinion that you should short solely on that factor because a lot of great men have gone broke shorting things just because they think something's going to happen. Your thoughts are worth zero in this market. If you got a 9-to-5 job and you go to work and you put in 100% of sweat and effort for your boss, you got to be right. You have to have an opinion. It has to count. In this market, that's why a lot of people cannot transition to traders because they have to have an opinion. They have to be right. And the only thing that you should know in this market is that you know nothing. Your opinion counts for zero, has no value. It's worthless. It sounds cold. It sounds harsh. But it smells like money. That advice will make you money alone. Now, good luck implementing it. It's a little bit tougher because we're conditioned as humans to be right. You got to be right. We're doing this to be right. I'm going to ask you this. What do you want? Ego or money? What's going to help you more in your finances? Ego or money? And you decide. Dollar index, I expect to see these 99.5s hold. I think we start to bounce a little bit here. Don't get too excited, though. I think we're going to start to see some fading at 164. I think the institutional side would try to sell this dollar down, wipe out some sell stops. I still say we get these 99s. We just come too close. Not get them. But I'm watching it. I'm watching it very close. Interesting that bonds are rallying. Okay, 10 and 30-year futures on bonds are rallying. Gold's rallying. These are safe haven assets. This is where money goes when it's scared of equities. It's interesting all these assets are rallying, yet the market's not falling. Oil's starting to come down. I think the S&P 500 might get clobbered a little bit and bring it back into these 22 halves. I think if we just continue rallying on bonds and gold and the dollar goes up and oil continues to weaken, I think we got nothing but downside for the ES for at least a retracement. It's been a while since we got some sellers pushing price lower and then they've won and taken out some buy stops, which means that there's a lot of buyers already. And I think that a lot of the shorts that were trying to enter the market around these 75s that were calling this a high, including Soros, who lost $1 billion on this trade, $1 billion. I think those shorts got squeezed out. What you saw this 2-day rally was a short squeeze. And then on Friday, you've seen some buyers come in, but on pretty weak volume. So if we don't get above 2,300 on nice volume and get buyers starting to come into the market, once the shorts are squeezed, once the longs are long, guess what? They're all sellers once again. and nothing but sell stops wait for the downside, and that's going to push us lower. The retail mindset is to buy the highs and sell the lows, and I can tell you a lot of retails got suckered in close as 2,300. You could see it. You could smell it on the charts. All right, I think what we're doing right now, here's a road, and here's a deer on this road calmly eating something on the road. And you got a Ferrari flying down here, or a Mack truck, not a Ferrari, Mack truck flying 90 around this bend. This deer might get smoked. I think it's going to see the headlights and freeze, and then boom, it's going to come down. That's my longer term outlook, 1 to 3 weeks. I think we got some downside of the market, but I'm not going to go to the grave with that theory. If we start to squeeze above 2,300, I'm going to start getting long again. And remember, what I say on a swing trade basis is not necessarily what I do on my account. A lot of people say, well, George, you think it's going to go down. Why are you long? Well, I'm long right now. Okay. I was short up here. I took a 5-tick winner and I got paid. I make money on an intraday basis on the swings. And then on the medium term, I also look to position myself to make profit. These days, you cannot just be a swing trader. All right. I know it's so convenient for you guys to think I could just check the chart once or twice a day, make $1 million. Or so convenient for you to watch those YouTube videos of guys that are sitting on their laptop at the beach saying, you want to trade in the Philippines and Thailand? You want to be surrounded by cars, women, and cash while you trade there? Well, ask them to see their trades. And I can tell you, they ain't swing trading. They're probably just taking subscription money. It's really tough in this business to swing trade because it's very volatile. It's choppy. All right, swing traders are looking for these classical patterns. They'll say, look, it's a double top. I got to short it when it becomes a triple top. Oh, great, let's short it. Boom, they run your stops. You and everyone else shorted there. They run your stops. You're out of your sell position. You go and turn around to buy this thing because now you've missed the upside and it comes back in and takes your stop to the downside. That's what's happening to guys that are trying to swing trade these days. It's very frustrating. Very frustrating. I'm in that camp with you. I'm not isolated from any of this stuff. You think I'm not frustrated? I get frustrated, but I separate my emotion and I work my trades based on risk management. Right now, look, I started buying. You see a buying balance starting to form below the VWAPs on the ES. I think we break this thing out. I got my target. I take some money here, take some money up there. All right. Don't have opinion, have profit. It's more important. I want to show you one more thing for YouTube. We'll call it an early broadcast. I've been doing these too long for everybody. Here we go. All right, market breadth, very important to see this. The percentage of stocks above their 50-day moving average are now below their 50-day average. And we kind of crossed the sell threshold. We had a lower high, and I think market breadth has started to deteriorate. Okay, we're also starting to see the percentage of stocks above their 100-day moving average on the S&P start to stall out just below these 70s. And if we can break below 65, you're going to probably get a correction at a broad-based market sell-off. If you're not following market breadth, you're probably struggling with your trading because you need to. This is the internals of the market, as they call it. Very important aspect to follow. What else we got to talk about here? Look at oil. Oil can't break these 20s. Why? It's in the middle of this consolidation. It's going to fight. But I think we break them and close 52.90 for the end of the session. That's my outlook on oil. You guys have any questions on YouTube? Comments, concerns, emotional breakdowns? I don't know if I enabled the comment for you, but here, I opened it. Now you could ask questions. That's your market outlook. In terms of economic news, there's nothing today. Mario Draghi was speaking at 9 a.m. He said a whole bunch of foolishness. Nothing really important there. 10 a.m. we had labor market conditions. This report is meaningless unless there's a huge deviation, which it never does. At 1:30 we have Harker speaking from the Fed. All right. He has to reschedule. He's due to speak about payment systems in the internet age in San Diego. Audience questions expected. So the fact that there's audience questions expected, you know what they're going to ask him. When is the Fed going to hike rates? How many times? You know, anyways, I'm not going to go into this rant. I'm going to cancel that rant before I go into it. I caught myself. It could be a long one. But what I'm saying is watch for this 1:30 p.m. Keep an eye out on the stuff. Keep an eye out on Donald Trump's Twitter account. It's been over 4 hours since any interesting tweets have come out, so he's due for one soon. Keep an eye out on that. Be careful. No real economic news. We're trading on technicals. Tomorrow we got some stuff, but it's going to be a slow week, which means we're moving on technicals, which means we could stay pinned sideways because this market is calm, it's quiet. We've traded 630,000 contracts. Pretty crappy trading session. 180 before the open in the U.S. on the S&P 500 futures. All right, starting to see a little bit of volume, like 6,000 contracts on a 4 PNF bar that's been there for 20 minutes. You know, it's slowing down a little bit. Make your money before 11:30 Eastern and walk away for the day, which is what I plan to do. Anatoly's got a question. Anatoly, let me answer it in 1 minute. I'm just going to shut down the YouTube portion of this, and then we'll carry through the subscribers and talk about our trades for the day, what we've done, what we think is going to happen, and we're going to put some stops on this oil trade. All right? Thanks, pal. Appreciate it. All right, guys. With that, have yourselves a wonderful afternoon on YouTube. I hope you've enjoyed this broadcast. Please share with your friends, subscribe below, and you can get updates on these market conditions daily, Monday to Thursday, typically. Not always, but most days we're here. Feel free to give us a shot for the 14-day trial. It's absolutely free, and you're going to learn a ton of information. If you want to learn options, futures, stocks, we have all the education there for you, and we include information that helps you trade like a professional trader. Believe me, what you think you're going to get and what you actually get when you try this 14-day subscription will blow you out of the water. It'll blow your mind, and you're going to see how much you thought you knew that you didn't, and how irrelevant some of the things that you see out there that you think are important really are. All right, that's kind of where I'll leave it. Check out the 14-day trial. I got a ton of info in there for you. If you have any questions, email me, Georgia Trade Pro Academy, or info at Trade Pro Academy. Look forward to seeing you in our trading room as well. Oh, by the way, the trial comes with access to the trading room for 14 days. You get to see all of our live positions, everything we do, all of our analysis, my daily P&L, and I show that. If it's a good day or a bad day, I don't care. I show it. You need to know the truth. Take care. Have a wonderful afternoon, and I'll see you tomorrow at 12 p.m. for another midday market update. All the best, guys. Subscribers, hang tight. YouTube, have a wonderful day. Trade careful out there.